3M stock is down 16% year to date, and the massive decrease on the 23rd of January due to disappointing earnings. But if we take a quick peek at the earnings, we see that they beat on EPS and revenue. However, the main thing was the weak guidance. And most people do like 3M stock because of the dividends. And I understand why, with dividend yield sitting at 6.5% and 65 years of dividend increases. That's insane. However, if we look at the total returns in the past 5 years, we see that 3M stock massively underperformed the S&P 500. In fact, 3M had a negative return, and this is including dividends. So could this be the perfect time to buy 3M stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does 3M do? 3M manufactures and distributes a broad range of products, from building materials and adhesives to medical and home cleaning supplies. The company's safety and industrial segment generates the most sales and profits. In here we see the fourth quarter earnings. Revenue was reported at 7.7 billion, which is in line with the guidance range. However, year over year the revenue is down 1.4%. Operating income was reported at 20.9% margin, up 180 bps year over year, of which 140 bps heading from restructuring and related charges. EPS is up 11% year over year and exceeded the guidance range. Free cash flow also looks pretty good year over year. In total, 3M returned 3.3 billion to stockholders in 2023 with dividends. For the full year of 2024, 3M expects revenue to be in a range of 0 to 2% growth, which is of course not really exciting. Earnings to be in a range of $9.35 to $9.75 and free cash flow conversion in a range of 95 to 105%, which is much lower versus the previous number. In this sheet we see the outlook per segment. Every segment is expected to report flat numbers, which is kinda disappointing. I was hoping that at least one segment was showing some growth. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. 3M stock is a 15 billion market cap company. PE ratio isn't shown here because of multiple reasons. Later in the video I will show you my 3 price targets for 3M stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on 3M. Revenue is at 32 billion and in this graph we see that revenue went up in the long run. However, in the recent quarters revenue is coming down significantly. Margins were really steady in the long run. In 2023 they took a big hit and the numbers aren't fully updated yet, since we saw in the earnings report that 3M is having a positive margin again. It's the same story with the EPS, so definitely keep an eye on both numbers. Analysts have a positive feeling for the EPS in the coming years, with 4 to 7% growth per year. To me, this looks pretty good. For the revenue, it is also looking pretty interesting. Of course, we have lower numbers with 1 to 3% revenue growth per year. The 15% growth reported in 2027 feels a bit unrealistic to me. Return on assets is sitting at 11%, which is a great number. Return on equity looks really bad, and the most important number, return on invested capital, is also looking really bad. Current ratio is at 1, which is a decent number, nothing really special to mention here to be honest. Right now 3M has 17 billion in debt, I prefer companies that can pay down at least a big chunk of their total debt with the total cash. 3M has 6 billion in total cash, so they can pay down a decent amount of their debt. To me, this looks pretty decent. But it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is looking pretty good. But it is not really steady and consistent, so keep an eye on this number as well. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6.58%, which is an insane number of course. Annual payout is a little bit over $6. Payout ratio is around 65%, and I prefer 50% or lower. So right now they have 35% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 1%, which is a low number. But given the fact that dividend yield is already this high, I don't mind that much. On top of that, they increased the dividends for 65 years in a row, which is really insane. In here we see the dividends paid since 2012. You see that 3M did increase the dividends at a really low pace, but still this adds up in the long run. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that payout ratio is somewhat steady between 55 and 65%. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. Overall these dividends look really good to me. But how about the historical returns? I decided to compare 3M stock with the overall market, in this case the S&P 500. On the 5-year chart we see that 3M underperforms the S&P 500 big time. In total 3M returned minus 46% including dividends, while the S&P 500 was sitting at almost 100%. On the 1-year chart we see that 3M is still sitting at a negative 12% return, while the S&P 500 is crushing them with a 32% return. On the 6-month chart it is again 3M stock with a minus 12% return, while the S&P 500 is sitting at almost 15% return. On the 1-month chart it is still 3M that is sitting at a negative return of 4%. The S&P 500 is sitting at a positive 4% return. Bottom line, in the past 5 years the S&P 500 was by far the better choice here versus 3M stock. So could this be the perfect time to buy 3M stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 6, 8 and 10%. For the free cash flow margin I'm putting in 15, 16 and 17%. For the PE ratio I'm putting in 10, 12 and 14. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 13%, since I can get an easy 10% average annual return with owning an ETF. Right now 3M stock is around $91. I hit analyze and we see a lot of red numbers. We have a low price target of $28 to $71. We have a mid price target of $46 to $93. And we have a high price target of $71 to $122. To me, the mid price target is the most justified here, and I'm more focusing on the discounted cash flow value, due to the margin problems they had. This indicates that the stock could be undervalued by $2. To me, that is fair valuation instead of undervalued. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on 3M stock is that they are hammered down a lot, but still don't look that attractive to me. Most fundamentals look great, but they lack in growth of course. From a dividend point of view, I do get the excitement. Dividend yield is really high and they have a proven dividend growth track record. But if you look at the 5-year return, you see that even with including these dividends, 3M returned minus 46%, which is a really bad number of course. From a value point of view, I do think it is also not that exciting. And to me, it also feels that the stock price will go down even more from here. On the other hand, it is still a great company with an interesting portfolio. So for now, I'm skipping this stock and I will keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.